Hi everybody, welcome to Sunshine Official's YouTube channel, which today I have created and decided to make a video on YouTube channel on the various contents relating to financial reporting, accounting related queries, taxation related queries, and other matters pertaining to this. So, and I would also like to share before moving on to my next point and before sharing my contents is that what the purpose of mine of making YouTube videos and creating this channel, because nowadays I'm having some free time and I always believe that as much as knowledge a person shares, it indirectly gives that person's benefit of somewhere that person's skills enhancement. So I wanted to take fully advantage of this opportunity, and of course nowadays this YouTube channel and all this trending going on, so why not me? Let's create a YouTube channel and being a part of this journey of becoming a vlogger as well. I don't know, okay, but without so today my content would be on a query that I received yesterday from one of my friends who works in the finance section of a multinational company, and their financial year end is going on. I'm sorry. And their financial year end is going on. As you all must be aware that in the multinational companies, I mean the foreign companies which are incorporated outside India, their financial year and calendar year generally begins on 1st January to 31st December. It's not the same for all the countries, but yeah, in most of the countries it's like that. In contrary to what we the financial year we have in India. Okay, so let's move on to the point. So he was asking me that what is the accounting treatment of the assets which are held for sale, or is there any impairment needs to be calculated? So basically, when if you are holding any non-current asset in books, I mean the asset which is been accounted for as a non-current asset, and now you are intending, now the company is intending to sell that asset. So in such a scenario, that asset needs to be calculated at carrying value, whichever is standing in the books, or the fair market value, whichever is lower, and whatever the differential amount in between these two. So for instance, if your carrying value which is in books is 100 and the fair market value which you now have calculated in view of your asset being coming under the definition of held for sale, because the company is intending to sell that asset, the fair market valuation is 90. So 10 rupees would be accounted for as a loss in books, and accordingly the book valuation of that asset would be counted as 90. Now this asset needs to be further revalued if the asset is not being sold at the year end. So I mean to say that at the year end this asset needs to be revalued and impairment needs to be calculated, because generally such kind of assets are sold within 6 months or maybe 8 or 10 months itself, and do not take much time, but in some exceptional circumstances it may take time, and I will give you some of the examples when does it really happen. So in that case, at the year end, that non-current asset held for sale which you earlier calculated at the fair market value or cost value, whichever is lower, it needs to be revalued. And in case now you got the impairment gain, so impairment gain even you can recognize in books and hit your P&L on the credit side, but impairment gain can be reversed only to the extent of the loss which you have recognized earlier, not beyond that. So if you have got a gain of 35 but the loss which you recognized earlier was only 20, so you can reverse impairment to the extent of 20. I think most of the commerce students who have read Ind AS 2 inventories, they must be aware about this calculation, because even in the course of inventories are also kind of held for sale assets, right? So in the case of inventories also, the same are calculated at cost or net realizable value, whichever is lower. And in case net realizable value becomes higher in future, so the same can be reversed only to the extent of loss, or to the downward amount that which you had recognized earlier. So the same goes for non-current asset held for sale. So thank you guys, thanks for being with me. This was a very short video which I created on the accounting treatment and the impairment which needs to be calculated for such kind of assets which are held for sale. So do let me know in the comments if you like this video, and help me to know that what kind of content or what kind of queries you have, so that I can help you further by making such YouTube videos. So just do like, share, and subscribe my YouTube channel Sunshine Officials. Thank you so much, and happy new year guys.